Hi guys, good afternoon and welcome to Moneycontrol. I'm Karunya Rao. With me is the woman in black, Manisha Gupta. Well, we're both women in black today. But let's talk about the not so happening news or not so positive news in the commodity market, which is the fall that we've seen overnight in oil as well as natural gas prices. Let's talk about oil first, and why is it trading weak?
So I think it's more and more officials and people with top authority talking about a possibility of a recession going forward, whether it's most likely, whether it's going to be mild, but it is recession that everybody is talking about, and that doesn't augur well with the crude oil prices now. And look at across asset classes right now, whether it's equities or many of these commodities, almost everything has seen a decline. There are concerns about demand. The China is reopening, but the demand is clearly not coming back. And when you look at the Chinese PMI data, fifth month of decline, and at 49, this is the lowest in many months, and that's what seems to have spooked the markets. And then IMF telling you that there is growth concerns not just in US but European Union and China. Well, crude is taking a knock.
Yeah, I mean, all of this time people were waiting with a bated breath on China reopening finally, and even that hasn't really done much. And if you look at commodities basket, I think barring gold, silver and perhaps nickel, everything else is pretty much in the red. I remember you had highlighted that on the downside $75 provides a good support. Does that level stay, and how close are we from that level right now?
So when you look at the WTI prices, we're trading at around 76, 77. So we're not too far away from that level for the US crude prices. But that 75 was a target for Brent. And for Brent, we're still holding around 81 there. But then overnight, we've come down from 86 to 81. And that's a very sharp knock that crude oil prices have seen. It is damaging on the charts there. But the markets also do believe that while 75 could be a strong support there, on the higher side, by the end of second quarter, we are going back to $100 a barrel. I mean, that is something that most oil traders and banks and brokerages continue to reiterate. So whatever bad news that you have to deal with perhaps will happen in the first half of this year.
Yeah, and typically when oil price falls, markets do cheer up and markets
kind of
rejoice, and that it's far from happening today. We're 1% down on both the benchmarks as we speak. But what about natural gas? What are the triggers there that are pulling down the commodity?
So three things there. One clearly is the slowdown concerns. Second is that because it's windy and a lot of power generation is happening with wind, so the gas is not so much in demand. The third thing is that in all of these years, even as there has been lower gas or whatever with gas news coming in, the European Union and Germany, which is the largest gas consumer in Europe, has had inventories of 70% of their capacity. This time around, we've got into winters with more than 90% of capacity, and even as the December is done, we are in the first week of January. Both of these countries are holding inventories, rather European Union and Germany are holding inventories anywhere at 84 to 90% of their capacity, with first half of January expected to be milder winter. So that tells you that the inventories are huge, the winter is not coming.
And there's enough supply in the system. Okay, well, and could it also be a case of profit taking given the upsurge that gas saw?
Oh, absolutely. If you look at the 4 trading sessions, we've seen gas prices come off by 15%. If you look at last 2 weeks, we've come down by 24%. So clearly the last 1 month is all about anything but profit taking that we've seen here. And with the kind of declines, the markets do believe that there could still be some more decline from here, because we've built up inventories, we've bought so much into the commodity, and clearly the fundamentals have turned around.
Yeah, and right now there's so many macro triggers to watch out for at the same time. But in a time like this, when everything pretty much seems to be in a flux or uncertain or ridden with a lot of pessimism, do you think one should tread with commodities like gas and like oil, which could really sort of see a lot of volatility overnight as well?
So, when it comes to crude oil, there's not so much of a decline from here. Most people still believe that there is going to be a decent rebound from here. 95 to 100 is something that almost everybody is talking about. Gas, yes, people are not very confident about. You could still see some decline. Whatever buying we will see is only once winter catches up, and that is by the end of January. Feb, March could be colder months, and you could see some support coming in there. So until then, it's a lot of caution there. And as you mentioned, today is the US Fed meeting minutes, and then you have the US non-farm payroll data on Friday. So the next couple of sessions can be equally jittery.
Okay, well, brace yourselves for some more turbulence as far as oil and gas prices are concerned. With that, it's a wrap for today. Thank you for watching.